Happy September. Hi everybody, Erika here with Let's Talk Mortgage Pro. And if you don't currently follow me on social media, please do. I would really appreciate the follow. I do a lot of work over on my social media to inform people and yourselves about credit and the market and different loan information, consumer things like credit cards and stuff like that. So please give me a follow. I would really appreciate it. And you're welcome to always share my content because I really hope that it helps your friends and family as well. I'm coming to you this September to talk about the market, what's going on with mortgage rates, what's going on with the Federal Reserve and short-term interest rates that affects things like your car loans, your credit cards, and your, obviously your wallet, but also something very, very exciting coming soon to save you about $100 to $150 on your monthly mortgage payment, which is obviously a very welcomed thing from the state of Texas. So if you're listening to this video and you're in the state of Texas, which is where most of my clients happen to be, keep listening because this is very, very important. If you're not, keep listening anyway because it's a lot of great information. So obviously cooler weather is approaching, thank goodness, and hopefully a lower electric bill because I don't know about you guys, but mine's been kind of crazy. But hopefully, again, you saw my Instagram and whatnot post on that because my son and I did a video on how to save you money on your electric bill. The Fed Chairman, Jerome Powell, is, of course, a high-profile person. He is in charge of the Federal Reserve Bank, and he spoke last Friday over in Jackson Hole, Wyoming. I'm hoping that he had a wonderful time on taxpayers' dollars there on what he's expected to do with short-term interest rates to help affect and lower inflation. He is watching consumer spending. So he's watching what you and I order on Amazon, so to speak, not exactly that, but how much we're spending. And more importantly, he's watching how much did it cost last year versus how much does it cost this year. That is where the index and that increase or decrease is very, very high on the priority list. He is looking for a core personal consumption expenditure percentage of 2%. We are currently at 4.2%, so hopefully that'll continue to keep coming down because it was higher than that previously. But issue number one is that we keep buying stuff. And as we keep buying stuff, obviously demand is high and that keeps prices high. So the other thing, of course, that they're also watching is consumer credit card debt, which is $1.1 trillion currently. This is the highest it's ever been, unfortunately. Not exactly something to be proud of, clearly. And I just did a video on this too, on ways to get your credit cards paid off early. So hopefully, if you didn't see that, you'll go check it out as well, because it's got some really good suggestions in it to try to keep those credit card bills down. Issue number two that the Fed is watching is unemployment and employment numbers. And as of last week's speech, they were still strong. But as of today's reports, they're not. Unfortunately, this employment report is filled with part-time job data as well, which is not exactly something that we can count on as being accurate portrayal of the employment situation in the United States. So the other problem is that this report is constantly being adjusted. In other words, they will make revisions to it and say, oh, we have new information that just came out. For example, just last week, they revised the employment numbers from April of 2022. That's over a year ago that they went, oh, there's new data. We had to make some corrections and it's lower. The problem is that the market, the stock market, the bond market adjusts its reactions based on these reports. And so clearly, if these reports are outdated, when the information is listed, it's not even accurate, and then they come back, a year or two later and they adjust it, the market doesn't readjust based on that new adjustment. So it's very frustrating from somebody like me who watches a lot of data because the Fed is watching really inaccurate data. And it just is super frustrating for me. But mortgage rates are still high compared to a year ago. But remember, mortgage rates do follow inflation. So as those personal consumption expenditures that we mentioned earlier start to come down on a downhill slide, we should see improvement in the coming year. So I do expect rates to start to slide down. And of course, for people like me, whose first FHA loan was 9 when I was 19 years old, I'm always happy when rates are less than that. But of course, I would always like my mortgage rate to be lower too. So I will keep you posted in future videos as to what the rates are. Currently, if you're curious, they're 7.1% on a national average. And of course, that has a lot of different factors to it, because you are going to be able to find lower rates, you are going to see higher rates, and of course, there's always some specials running. For example, right now there is a state special running, and it's 5.625. Not everybody qualifies for it, and the money is definitely first come, first serve. But that just goes to show you that don't always read what you see or listen to on the news. It's not always accurate. If you do figure out you have too much consumer debt and you need to look at using some of your home equity, we can also discuss that as well. I'm not a super fan of doing that just because the way rates are, but if your interest rates on your on your credit cards are super high and your mortgage balance is not super high, it may be something that we need to look at, and we can always compare. Next, some exciting news for my family. My son, Derrik, has decided to join an education-based financial services firm to help families build wealth and protect themselves, both in insurance and other asset protections, especially focusing on life insurance and investments. His mentor of 35 years has sort of taken him under his wing. And one of the areas he's especially excited about to help my client base is through the mortgage protection through life insurance. And so he is offering a no-charge financial analysis for my clients. It only takes a few minutes to start the process, and there's no obligation, of course. Let me know if you are interested. I did recently have a client who lost her husband, and he had no life insurance. It has not only wrecked her just emotionally due to the untimely, unexpected loss of her husband, but also financially. And so you definitely don't want this happening to you or your significant other or spouse. You don't want them to be in a bad financial situation when something happens to you. It's not a matter of if, unfortunately, it's when. But I actually am a customer as well of his, and I can tell you that I'm super happy with what I was able to secure. And so that's the latest and greatest for my family. So if you're interested in that, just let me know. You can send me a text or email or call me. Lastly, a big money saving story I want to come to you about is for my Texas peeps. The state of Texas just finished a sweeping legislative session, but especially focused on property taxes. The legislation passed Senate Bill 2 and 3. Both require you to get out and vote on Election Day on Tuesday, November 7th. Tell all of your friends, because Bill 2 will save you between $1,200 and $1,400 per year on average in property taxes. So $100, $125, $150 a month in your mortgage payment. And if any of your friends are self-employed, Bill 3 saves self-employed people money on franchise state taxes. Now here's the deal. You got to vote yes on both. Bill 2 and 3 have to pass together in order for them to pass. So it's very, very important that you get out and vote on November 7th. That's Tuesday, November 7th. Please put it on your calendar, because I want to save property tax money too. So let's do it together and save some money. That would be fantastic. I hope that these videos are proving useful to you guys. As always, any mortgage or financial questions that you might have, feel free to reach out. I am your mortgage manager for life after all. I'm happy to help you, and have a wonderful and safe Labor Day weekend.